The 1% are about to get way richer. And it's not because they're smart. It's because they know these three things about this big, beautiful bill that the rest of the world just doesn't know yet. Let's break it down. This legislation is going to supercharge asset prices, widen the wealth gap, and quietly reshape your financial future. But if you understand what I'm about to break down, then you have an opportunity here to move up the financial ladder. So let's break down what the 1% know about this bill and what you can do to take advantage. First, you know how this big bill is giving tax breaks to the rich, right? What the 1% know is exactly what this actually means for the economy. When wealthy people get tax breaks, they don't take that money and buy cars. They take that money and they buy companies. Economists call this the marginal propensity to consume, which means that the richer you are, the less likely you are to recirculate money into the economy. And instead, that money is going to go into assets like stocks, real estate, private equity, and in this case, you have to keep an eye out on crypto. So when a bill lowers taxes or increases incentives for the rich, that money is not going into small businesses or Main Street. No, that money is going straight into Wall Street. And if you don't own assets, then you are not even in the game. The second thing that the 1% understand about this bill is the impact that it's going to have on the real inflation. We are taught to look at inflation as the price of groceries or the price of gas at the gas station. But in reality, that's a complete distraction. The real measurement of inflation is the price of assets. And as demand for these assets continues to rise, the prices will as well. And as that occurs, it's going to be even harder to purchase your ticket into the game. If you do not own income producing or appreciating assets at this point in time, it's only going to get harder moving forward. The third thing that the 1% understand about this bill is that it's going to inject another $3 trillion in the national debt over the next decade. And that debt is going to have real consequences. Foreign investors have already stopped buying US treasuries at the same rate that they have in the past. What that means is that the actual rates in the market are rising to compensate for that decreased demand for the treasuries. As the demand for bonds decreases, there is also a decrease in the demand for dollars that you would need to use to buy those bonds. And therefore, the value of your dollar is going to be continuing to decline on a global stage as the bond market cools off. When the dollar declines, hard assets, precious metals like gold, commodities, foreign currencies, and even foreign equities have a real chance to continue to rise as this rotation away from the United States dollar continues to occur. Let's recap. First, the fact that the tax breaks are going to the rich means that they are not going to be spending that money in the economy. Instead, they're going to buy assets. The second thing is that with this increased demand for assets, the price of entry into the game of investment is going to continue to rise as time passes. Third, as the United States massively increases its national debt, the value of the dollar is likely going to decline. You have to be prepared for that kind of a scenario and what that means for your wealth as an investor. If this all sounds like a foreign language, it's okay. In the United States, they do not teach us this information. What I'm going to do is I'm going to break down all of these macroeconomic concepts step by step on a series on this channel. So hit the subscribe button. Next, if you are just feeling lost in general, what I need you to do is to develop a plan. In the description, there is a link to a two-part system that is going to give you what you need to, first off, figure out exactly what it is that your next steps are, and to, secondly, develop an entire wealth plan based around what it is that makes sense for you. I don't care how you do it, but what I do need you to do is to develop a plan, because what's about to happen over the next decade is going to change everything.